Hi, everyone, and welcome to our webinar on Main Street residences in Wichita, Kansas. We're going to be talking about this incredible deal and going through all of the amazing details. I'm here with our amazing sponsorship team that we're going to introduce shortly.
Okay. Thanks, Ronnie. Thanks, Ben. And thank you for saying we're amazing. So Paul Montalongo, Letitia Montalongo, my wife. And yeah, we're pleased to bring you this investment opportunity. And at the beginning of every presentation, we give you a notice and disclosure. And essentially, when you read through this, you'll understand that these are projections and that we highly encourage you to take the information that we provided to you and seek out professional advice so that you make a good investment decision with your money. We've done everything that we can to provide as accurate information as possible, but investing is a risk and investing is something that you should take seriously. So when you read this, go ahead and get your advice to make sure that you're investing correctly. All right.
So I'm Ronnie Shalev. I'm a board certified ER physician turned real estate investor. Ben and I are serial entrepreneurs and experienced investors. We've invested in biotech, startups, oil and gas, and our favorite, real estate. We've invested in multiple asset classes within the commercial real estate space and have really loved the multifamily asset class. The stability it offers is really incredible. And we currently are general partners in over 1,300 doors and have invested in over 27 syndications. And together we have around $178 million of assets under management.
So my name is Ben Winsky. I'm Ronnie's husband, and I have I'm really excited about this opportunity. So to share it with you all, my background is construction and asset management and business ownership. So I've been the last 20 years, I've been focused on really understanding how to build stuff, how to make stuff work, numbers, and operating companies. So I'm really excited to get to work on this project and help out and add value. So with that, we'll move on to the next sponsor.
I'm Paul Montalongo, as we said a few minutes ago. And so I have a lifelong career of being a businessman, own numerous businesses. I've invested in all kinds of real estate. And since 2015, I've been investing in multifamily assets. Thus far, I've invested in over 1,000, almost 1,100 units. We currently have somewhere in the range of 600 to 650 units under management. But primarily, if I had anything to say to you, I would say that I'm a businessman. And why that's important is because I look at all of these investments as a business acquisition. So we take a current business, an apartment complex like what's in Wichita here, Main Street Residences, and we make it ours. We make it our business plan. We improve it so that it is ready to sell at the most optimal price possible. So that's my career thus far.
Hi, my name is Letitia Montalongo, and I am the co-founder and managing member of Avalar 3 Capital Partners. My responsibility is to be nurturing investor relationships, and I help raise capital for our deals. We're very excited about this Wichita acquisition. It's our second property that we've purchased in Wichita in the last 6 months. So we know that it's a great area to be purchasing in, and we have a great team put together. So I'm excited to be part of this team.
Hi, guys. My name is Jonathan Sprinkle. I am the owner and operator of ICS Quality Homes out of Austin, Texas. We do custom remodeling. Been doing that for 22 years, over half my life. I've been a contractor since I was 18 years old. I've done the hands-on work. I've been the business owner as well. We rolled into real estate and started doing investments in 2013. We've done everything from long-term rental to Airbnb style short-term rental, flips, multifamily, RV and boat storage, self-storage. You name any kind of real estate stuff, we're pretty much involved in. We're extremely passionate about it. And my team with CH Capital Partners, along with Elvin and Mike, I'm the managing member for that team. And this is a great opportunity. We love Wichita, Kansas. This is our second acquisition that we've done, and we're very excited to be in that space.
All right. I'm going to kick this off with a project summary. So this property is in Wichita, Kansas. It's right near downtown in the Riverside submarkets, which is a nice core area of Wichita. There's 88 doors on this property. It was built in 1976 and completely renovated in 2001. It's considered a Class B asset, and our purchase price on this property was $6,019,000, which is about $68,000 per door. Current occupancy is stabilized roughly around 94 to 96%. So now let me take you to the executive summary, where I want to talk about the opportunity. So this is a value add apartment complex. That's our strategy, is to come in, make it nicer, make it a great place to live for our residents, and be able to raise and charge accordingly for that. This property, like I said, was purchased for $6,019,000, and with a loan to value of 67%. So we have very low leverage, or very comfortable leverage of debt that we put on this. So we're comfortable there with the loan that we put on it. We have roughly a $4 million note on the property, and our interest rate actually came in better than our projected 6%. We are at 5.69%. So that's another upside of this deal. With our loan, and we'll get into more of it later on in this webinar, we have a 10-year loan. 5 years of that is interest only, fixed and amortized over 30 years. Projected returns, we'll get into, again, more of the details in depth later on in the webinar, but we're looking at around over a 2x return on capital invested and a 5-year business plan to hold it. Next slide. So one of the biggest things that we want to emphasize on this property and this project is it is coming in at a point now where we have really de-risked the project. So this, and I want to start off by giving you some reasons why. So no closing risk. We have already closed this property as of January 6, 2023. We've taken over. This property actually appraised for close to $500,000 more than we bought it for. So there's upside right from the start. We have permanent 10-year term fixed rate loan in place. And one of the things I love most about this is we really have under market rents. So we've proven a 25% average rent increase with no CapEx being spent. And that's, hopefully we continue with that, but we're off to a great start. So we're really excited, and we found a great property that's under market. Management company has already completed the takeover. They put their systems in place, all their operating systems and payment systems and management systems. So we've de-risked it there, because sometimes that can be a big heavy lift, and we find a lot of skeletons in the closet as far as just people that weren't paying, and we've really dug into that. And by the time that you see this now, we've had the property for roughly a month, and in that time we've found really good things. So we're positive there. Another thing that's de-risked is this is a stabilized property in occupancy. It has very high collections percentages, and we have no evictions going on at this time. So we're excited to bring this to you.
So why Wichita? You might think to yourself, I don't know anything about Wichita. Well, Wichita, Kansas is a great place to invest, really for several reasons. It has a strong and diverse economy. It has a strong aerospace and aviation industry, growing healthcare and technology sector, and a very well-established manufacturing base. As you can see on the right, the list of the top 10 employers is super diverse. This is important when you're choosing a market, because you really don't want to have one major employer in one market, because if they go out of business, all your tenants lose their job and they can't pay their rent. So we love the diversity in this market. There's also a very favorable cost of living. The cost of living in Wichita is relatively low compared to other major cities in the United States, making it super attractive place to live and to travel to. And you can see that Wichita was ranked number 4 as best value for a place to travel to, and number 20 as best places to travel. It's got a huge cultural scene, and it's got a revitalized downtown. So it's a really, really great market. Specifically in the multifamily market, there's been a 6.3% rent growth, and the average occupancy is around 95%. The downtown Riverside market has had a good population growth as well. It's grown 10.7% in the last 10 years. And as you can see, the average household income is strong at $55,000.
So when Wichita was first presented to me back in April, on the other property that we purchased in downtown Wichita. My first question was, why Wichita? What's in Wichita? That was literally my first question. I had no clue that Wichita was a market to even consider, because the thinking out there right now is invest in Central Texas, invest in the Texas Triangle, and that's where the most stable investments are, et cetera. And while those are good places to invest, my history is I've always looked for other markets called emerging markets to be able to place investments, because there are a lot of benefits to that. When we evaluate a market, there's about 10 to 12 markers that we look for to make sure that a market is accessible and a market is going to be stable enough for us to invest. Jobs, job growth, population growth, median age, median income, and then more diversity of industry. And so when we look at those markers and all the boxes check off, then we zone in and we look at the actual sub-market. So the actual sub-market of the market Wichita is the downtown area. And this property on Main Street is located, and Letitia is going to talk about this, in the downtown area. The other property that we purchased is located in the downtown area. And why that's important is because of all the growth in that particular area.
So Wichita is the #1 city for manufacturing jobs. A lot of the manufacturing jobs are aviation based, like aerospace, and Pfizer manufactures a lot of their medications in Wichita. What I do want to point out is that Wichita has a #6 strongest U.S. recovery from COVID. This is big because, and it's based really on such a diverse employers and the manufacturing within Wichita that has contributed to its amazing recovery from COVID. It also has been ranked top city for livability and top 10 for the most recession-proof city in the United States, which is really remarkable and super important as we're heading into a recession right now.
Okay, so now we're going to talk about the overview. So we've told you before that it's downtown, but this particular slide will show you all of the different businesses that are downtown in Wichita. So our property is located on the loop that goes around the city. And so it is adjacent from where they are spending millions of dollars in the downtown area. They're putting in this new riverfront stadium that is slated to go in next year. There's performing arts centers. So it's a typical downtown place, whereas if you see most cities, everyone wants to go downtown. But what is so great about our property is the size of the units. They're a little bit smaller. So there's lots of people that want to lease up these apartments, primarily because they can go there, they can have all these activities. There's parks, there's walking trails. As you can see from this slide, it's only 4 miles from Wichita State University. So we can have students that actually can go to school there, but live downtown and enjoy all that's going on. Also, it's only 7 miles from McConnell Air Force Base. So we will be able to have some residences stay there that are military. So as this city continues to grow, you will see that it has everything right adjacent to where this property is located. Our other property is located only 1 mile away, the one that we purchased in July. And we also feel that property, we are doing well in our rents precisely because of the location there. Okay, so why invest in Main Street residences? This is a Class B property, and like we had spoken earlier, it does have plenty of value add. We purchased this from a gentleman who had it in a trust that he received. So he didn't really do a lot to it. So he just had it there for a while. So when we found this property through our initial evaluation, we saw that there was a lot that we could do to it. Small value adds, but because of the primary location, we were going to be able to raise rents easily. And it is one of the few properties in the downtown area that has a large number of lofts. And what we have found since we've taken on this property, that there are hardly any lofts in the area at the price points that we have. So that is one of the reasons that we really love this property. The CapEx that we have in place is very small, but it's still going to allow us to do cosmetic and curb appeals to improve it. We have an electronic sign outside, which is on the highway frontage. So that is really the only marketing budget that they have for this. So marketing budget is very low, but we're able to really draw in those prospective tenants in that area.
So let's talk about what's in the property itself. So some of the features are the clubhouse, a really nice sized leasing office, a pool, a fenced in pool area, gated access, close proximity to the major retail and restaurants and business centers in the downtown Wichita area. Fireplaces in some of the units, plenty of parking, access to the frontage road that surrounds the city, great visibility. We talked about how we've already taken over the property, and property management has been there for about a month. And while Jonathan and I were there last week working with the property management company in the transfer, we had 3 people walk in right off the street. No marketing. They just, as they were driving by, they walked in and they got a tour, and they 2 of them rented, and they, so great proximity. Let me just clarify, there is a fence. There's one gate but there's not a front gate. So one of our plans in the future is if we see fit, then we'll put in additional gated access to the property. But the property overall is safe. It's well lit, and it has, like I said, great proximity to the highway, and it shows well, it presents well, and that's a key thing when you're looking at a property. A, you don't have to do a whole lot of extra work to it, and B, are people going to come off the street and take tours to your property? So all of this bodes well in this property. So there are also the unit mix here. You see the unit mix of studios and lofts, and one thing that we observed is the square footage of the units themselves. And I think that I'm going to turn this comment over to Jonathan. Jonathan has a really good perspective on the size of the units and the size of the units in the downtown area. Jonathan, why don't you speak to the size of those units? Because from your research, I think it's important.
Yeah, thanks. So a lot of people, when they first saw the square footages, even when we were doing our research for it, in comparison to a lot of the other properties that are in the area, maybe all of them, we actually have the smallest units. So a lot of people question that. We questioned it ourselves. In talking to the local property managers, local investors, other brokers, the seller who really liked the property himself, that we actually realized that this was not a disadvantage, it was an advantage, because with the smaller square footages, we're able to keep costs down. So it makes it to where we're one of the more affordable options, even though all of Wichita actually has very good rental rates in comparison to other cities, as Paul mentioned earlier. It still makes it to where we're even below those. And a lot of Wichita, especially in the downtown area, is actually single people, don't have families, and so they don't mind that smaller space, because a lot of them they're only using their apartment to actually sleep in. They don't really hang out there. The Delano district is very close, has a lot of really cool bars, hangout places, really nice restaurants. There's the river is very close to go walking down, and so they just sleep in these apartments, and they don't have, it's not a big party area. It makes it very safe, very quiet. There's honestly, there's not enough room for people to be inviting over lots of people, and so it makes it to where it keeps it cleaner. We don't have all the disturbances that you can get in some places that have larger square footage. And so we actually really like the size of the units and the fact that they're a little bit smaller. We ended up with a few of the units that actually were furnished upon acquisition and takeover of the property. We went through and there were quite a few of the units that had the furnishings we've decided not to keep. And so we are keeping only the ones that have decent furnishings for the units. And we are able to charge a premium for the fact that they have the furnishings in them. So the ones that have the furnishings, those numbers may change, but we're currently working through them, and we seem to be getting a very receptive response from tenants looking to move in.
We want to talk about the comparables for the studio and 1-bath apartments that are close by. So like Jonathan was saying, there is a huge demand for these. There's a very low supply and there's a big demand. So especially being in the core area near downtown. So if you look at the square footages of our comps, you can see that, we were right along the same size and square footage, but the monthly rent, we're lagging way behind these comps that are a bit newer, but we're also going to be remodeling and updating our units as well. So if you'll see, like 658 is our monthly average rent, and the average for the submarket is around 858. So there's about a $200 delta that gives us a lot of room to move the prices on these. Next slide, please. So these are the 1 bedroom, 1 bath. And as you'll notice, it's a huge discrepancy overall between our property and the average. So again, there's just a lot of, there's not enough supply. There's a big demand to live near the core of downtown. And I think what we're seeing is we're able to move rents really without spending any CapEx money. But when we do deploy some CapEx money into making these apartments nicer, we're going to get higher rents as well. Next slide, please. All right. So I'm super excited about this. Since we took over the property less than a month ago, these are the first 7 leases that we've actually renewed. The old owner really did not push rents. They were happy with what they had. They bought it at a good price. They didn't have to raise the rents, and they didn't. So we're coming in and we are pushing the rents and, to market levels that we're able to achieve. And, over the last 7 rents, we've raised the monthly average. The net change is averaged $172, which is a 25% increase, which is huge. If you'll notice, and once you get into our pro forma, if we can do this with all the units, and I'm not saying we can, but we hope we can. If we can do this and continue to do this and perform like this, we will be ahead of our 5-year projection before the end of year 1. I mean, in year 1. So again, this is not indicative of every lease we sign in the future because we don't know the future. However, we're off to a great start. So as you can see, just that added value, if you capitalize that and see with the rent increases we've had, we have over $250,000 of value that we've added in the first month of ownership. Next slide.
So on the capital expenditures, actually, if you could go back to the previous slide. So this picture that's on this slide, as you can see, that's the updating that was done in 2001. So the cabinets, the countertops, the tile work that was done, it actually all is still in really great shape. Those cabinets are raised panel doors. We are possibly going to paint cabinets in the future. Originally, that was something that we were going to do out the gate. But in talking with our property manager, we actually don't have a need to do that currently. So what we're doing is on these units that have this kind of updating already done, we're just changing the paint colors to brighten the rooms. So most of them actually have a little bit more of a tan color on the walls. We're going to do a classic gray, which is just kind of an off-white color to brighten them up. Do it on the walls and the ceilings, and then paint the trim a nice bright white, currently kind of an almondish color. So 64 of our units actually look like this one does. And then 24 of the units don't have these upgraded type kitchens and such. And so in those, we'll do a little bit more of an extensive update. But a lot of the units, as I said, 64 of the 88 already look like this. And so a little bit of cleanup and some paint, and we're off to the races to be able to rent them out at these higher rents. You can go back to that next slide, please. So on our CapEx, actually, the majority of our budget is for exterior work. So the stairs and landings, we need to rebuild quite a few of them. They haven't been done in quite a while. And so we just need to get in there with some carpenters and get those replaced and changed out to make sure that everything's good for safety going forward with no problems. And we have a little bit of siding and fascia repairs to do. And then depending on where we end up settling, we may end up painting the outsides of the buildings, again, just to brighten them up. But otherwise, they're really in good shape. There's electrical panel upgrades that we're going to be doing, again, on 64 of the units, just to get them to a little bit more current standards, make it to where when we go to resell the property, that those electrical panels are good to go, and that the new buyer gets some brand new panels and those updates that come along with it. We have a little bit of landscape work that we need to get done. It's not heavy. It's mostly just kind of making some beds and cleaning up a little bit of grass and some trees, and that's about it. Next slide, please. So on our business plan, originally we actually were going to do some add-on type things such as tech packages, charge for laundry, and some different things that were going to be shown as a monthly expense to the tenant, the future tenant. We've actually decided in talking with our property management company that we're going to include those as amenities. So that way it's more attractive to tenants, so they're not having to pay these individual fees and these things are included. So we've already replaced 2 broken washing machines with new commercial units. The tenants love them because they actually have more units now and are able to get their laundry done instead of having to wait because of the 88 units that are on site. And the tech package, we've realized that the hotel style key cards do work, and that we have access to that. And so those are already updated and doing well. And so on our pro forma, as you can see, we're hitting most of those numbers that are year 3, 4, some cases even year 5 has been said. We're already hitting those numbers right now out the gate, and just by fixing up some of the things and taking care of some of the things that the previous owner was not doing.
Basically, this is our annual and resale distribution. So as an investor, you would receive dividends and a return on your investment. And so this is our projection in terms of that investment. And the important part of that is, I want to capture the really important part. This is the itemization of it as well. But go to the next slide, and let me do a recap of the so right here in the center where it says 5-year cap rate, etc. So these are our projections based on the business plan that we've been explaining to you. And essentially what you will see where it says equity multiple 2.1x, what that means is for $100,000 invested, you would receive your original $100,000 back, and then you'd receive another $110,000 on top of that. That is our projected return on investment. Now, the way that breaks down is you'll see above the cash flow as a percentage. So in year 1, we would return 2.29, year 2, 4, 3, etc., so that it averaged out for a 5.33 over the life of the project. We anticipate that we will put this project, this property up for market and up for sale in year 5, and then if we hit our projections as we've described them here, that the total investment return would be 110%. Now, are we set to sell it in year 5? That is the projection. We could sell it at year 3 or 4 or some other time. This all depends on what the market tells us. So we pay very close attention to the market, to market cap rates, which essentially is the value of the property, to the temperature of the market, to how many buyers are out there, what kind of price we could get for it. We pay attention to this all the time, like on a weekly basis. On all of our investments, we pay attention to this, because what we want to do is we want to hit that property when it's at its peak. And when it's at its peak is then we place it for sale on the market so that we can maximize the profits on the property and return the maximum amount of profits to our investors and for the property. So these are the digits, these are the numbers, the projections. But essentially what we are looking at here is a 2x multiplier, 2 times the money. Next slide, please. We then drill down a little bit further and we go, okay, what happens if we sell it in year 3? What happens if we sell it in year 4, year 5? And these are the projections at those particular market capitalization rates. You can see the graph on the right. If we sell it at those cap rates, then we expect to make those millions of dollars on the property. And again, all of this is paid attention to along the way so that we can maximize the return. Next slide. When we buy a property, when we project the expenses on that property, those are just projections. The comfort that we have in this property is that since we've already closed it, we know the cost we know what it cost us to actually close the property. So you can see that what we call uses and sources, or debts and fees. So we had a total of about $7.3 million in expenses, including the property and closing expenses, capital expenditures, etc. So Ben talked earlier about the de-risk factor. So there's always a risk when you're in the process of purchasing a property. You like to get close, and we've always been pretty close. But then once we close, we actually do know the exact amounts, and so we've placed those exact amounts in our business plan. You can see them there. The next slide, please. Now, when you buy a property like this, none of us wants to operate it. It does not make sense for us to operate it. We're not the experts in operating it. We turn that function over to experts. And so we go out into the marketplace, we interview property management companies, and once we interviewed our property management companies, we selected Clemens Real Estate, full service broker, property managed construction partner. They will help manage the capital expenditures. We have worked personally with this gentleman here, Todd Zauner. He's been at it for, I think, 30 years, he told us. I know it's 25, it could be 30. But why this is important is because he's been in the Wichita market. He lives 10 minutes from this property. So he knows intimately the Wichita property. Now, you always make a decision like that, and you hope you make a good decision based on all the research. And then once we actually bought the property and we came into the property and have worked personally and closely with Todd and his team, we're very happy with our decision. You can see, as Ben told you already, we've proven the upgrade in the rental amounts by actually executing leases. We've proven that the submarket of the downtown Wichita area is a good place for tenants to live and a good place for them to live in our property. So very pleased with the Clemens Real Estate property management, and we look forward to a nice, long, healthy relationship with them. By the way, totally automated. So all of our tenants, they pay through a portal. We receive our reports through a portal. So his philosophy is no paper. Everything is electronic, and we happen to like that. So we have access to all of that on a at any time we wish.
So, like we've talked about from the beginning of this webinar, one of the biggest reasons that we like this deal is that it's already de-risked. There's no closing risk. We already bought the property. There's no questions on whether the lender is going to pull the loan terms, or if we're going to be able to go raise the money, or what's going to happen. We've already closed. So that risk is eliminated. We already also had this property appraised for almost $500,000 more than the purchase price. So we've already essentially created value. We have a fixed rate loan in place, and this is for 10 years. That means, again, the unknowns. We don't have to worry about the Fed increasing the rates anymore. We don't have to worry about interest rate caps. We know what our payment's going to be for 10 years. And guess what? For 5 years of these 10 years, it's interest only. So it's even better. We know that this property is under market, and we've already proven that the rents can go up on average 25%. And that's with us doing nothing to the property. Can you imagine what it'll be like when we do something to the property? It's going to be amazing. We already also have the management company in place. They've got systems. They're already operating it. We already know the skeletons in the closet, and we're very happy that there are none. There's very, very low delinquency. There's no evictions, and we've got a stabilized occupancy. So this is huge. As a summary of this deal, I kind of just want to break it down into deal strengths, project returns, and the deal structure. So deal strengths, this is, again, like I just said, de-risked. We already have acquired it, and we're operating this asset. The second deal strength is that you're going to be getting this bonus depreciation for tax savings. We've had proven rent increases, and we've got a fixed rate debt. These are all the strengths. The projected returns right now, we're projecting a 2.2x equity multiple, a 17% plus IRR, and around a 20% plus average annual return, with between 5 to 7% cash on cash. The deal structure itself, LP-GP split is 70-30. Our acquisition fee is 3%. We have a disposition or a refinance fee for 1%, and we have an asset management fee for 2%. This is an amazing opportunity, and the fact that it's de-risked really makes it a bonus as we head into a recession. You can keep your money in a safe deal that is growing and provides tax benefits. So this is big. This is a 506C SEC regulated transaction. So this is only open to accredited investors. If you guys are ready to invest, go ahead and scan this QR code. It's going to take you to my investor interest form, where once you scan it and you fill out your information, I'm going to personally follow up with you, and we'll get you into the deal. So I want to thank everybody for being here for this webinar, and hope to hear from you soon.
Thank you.
Thank you.
Thanks, guys.
Bye.